So there's not much of a change, to be quite honest with you, in terms of what's going on in the markets. It's still very risk driven. So last week we had quite a significant flip actually in the markets in terms of sentiment, and we can see that detailed very well on gold. So we can see obviously gold's had a huge run, not even just recently, but over the past couple of years. But it seems as we've had the 90-day pause on tariffs, we've had more possible optimism around the hold on, let me just make sure people are muted there. More optimism around the China and US trade talks, which actually doesn't seem to be going too hot, but it is progress. We're seeing the markets very clearly move from what was a heavily risk-off market or situation. So we can see again with the yen, huge run to the upside, the Swiss, huge run to the upside, dollar down, euro up. That's because of capital flows. So now it's a case of are the markets going to continue with that same narrative of it being maybe that was just some profit taking and we're going to continue being risk off, or are we actually having a switch now to a real more risk on market? So actually, let me just pull something up quickly here. I think I need to log in. No, I don't. Okay, here we go. So we can see here on the market sentiment, we are seeing cautious optimism come back into the market with a risk on attitude by investors. So this is by the Fed policy speculation, strong earnings, tariff uncertainty, and geopolitical risks. So strong earnings is helping to bolster the S&P, the NASDAQ, Fed policies, obviously the US dollar, tariff uncertainty, and geopolitical risks are obviously risk off components. So we're not fully in the clear, but we are making progress. Just to slightly shift onto the pound, we are seeing inflation start to tick to the downside, reinforcing rate cuts by the Bank of England. We can see inflation was at 3, then it came down to 2.8, and now it's sitting there at 2.6. So that's something to keep in mind. If you are long on the British pound, just be aware that it is expected to go and start cutting rates later into this year. By the way, feel free to ask questions in the chat if you do have any. I will check it every now and again as often as I can. The US has had a slight downturn in some of the data. So we have seen the GDP come out at 2.4. We've seen industrial production come out at negative 0.3. We've seen unemployment tick up to 4.2. We've seen inflation come down from what was it, 2.8 down to 2.4. We've seen business confidence take a hit. We've seen consumer confidence also take a hit. We have seen retail sales actually stay relatively strong at 1.4. So we're still not in a recessionary field just yet, but it doesn't look good for the dollar. So just to quickly clarify, I've spoken about it previously, but I still get the question sometimes, if the markets are risk off, why is the dollar not doing well? Because a lot of traders are taught that the dollar is a risk off asset, which isn't entirely wrong. But what you've got to think about is where is this risk off market coming from? Why is it there? Well, it's because of the US, it's because of Trump. So investors are not going to go to a safe haven when that safe haven is the reason that they need to be at safe havens, if that makes sense. So the dollar isn't getting respected as safe haven, and we're seeing the euro get used as a proxy or as an alternative for the dollar. So we have got the US dollar actually showing some pretty positive signs in terms of price action at the moment. So we are at this weekly pretty, if a very strong level of support here around 100 to 99. So we can see very strong previous resistance, very strong current support. This is also within the Fib golden zone. So it's now a case of is the dollar going to stay above this level, or are we now going to start deteriorating down towards 90? If we continue to break this level of support, we see sellers step back in and take control, and we can possibly have next week's weekly candle close below this level. That would be a very strong sign to me that we are likely going to come down towards 90. However, if we can see this week coming, if we can see buyers take control and continue to push higher, that would also be a very strong signal to me that we might have printed in a temporary bottom for the dollar. I do still think we're going down the sort of medium to long term. But I think short term is definitely plausible to see dollar bulls step in here because we've had a very significant sell-off. We're now at a really strong technical level with a very crudely drawn trend line, previous support, previous resistance turned support. So we might get some buyers in just to have a temporary pullback on the dollar before we continue lower. So that brings me into some trade setups. Dollar Swiss seems again completely fine. The problem is that I'm having at the moment is sort of just relating to what I spoke about. I don't want to just start selling the dollar because we're having a small pullback. It's all good and well saying we've had a 50% pullback on dollar Swiss and now it's a great time to short. Fine. But again, the dollar's had a multi-week sell-off. Do you want to start selling the US dollar right here? Probably not. That's a little bit of a silly idea in my view. It's a little bit of FOMO. So I would actually be more waiting on these dollar pairs just to see what happens. So Monday is a complete no trade day for me because that's often when we get counter trend moves on Monday, so we can start forming wicks for that week. So possibly Tuesday, Wednesday, I'll start to say, okay, is the dollar continuing higher? If so, I'm going to stay away. If it's continuing lower and we see sellers stepping back into the market and taking control, that might then be a sign that we could possibly start continuing on the dollar short train. Silver remains a really, really strong buy in my view. The same thing as gold. Now, silver is tricky because we do have, oh, actually, let me just double check before I go on too far. I just want to check what the sentiment is on silver. Put to call ratio here, silver. So it's actually come back to a relatively reasonable place. It was all the way down here when I checked on, was it Thursday, Friday? Which so the reason we're looking at put to call ratio rather than retail positioning is because retail positioning isn't as accurate when it comes to commodities and stocks. You would more want to use a put to call ratio because this is for futures options rather than CFDs. So when we have extreme greed, that's the equivalent of retail being very long. When we have extreme fear, that's when we have an indication that retail is very short in the market. So it might be a sign now that we could start looking to get positioning on silver because previously I was very bullish, but I just couldn't get in because I was just aware that if we bought silver at this level, would have been buying in with mass retail, which isn't always the worst situation, but if you can avoid trading with them, it is the better rule to go with. However, now we've had a slight balance out in that to be honest, would be quite happy to just take an aggressive entry here. So we do have the moving average cross indicating a very basic trend change. We're very clearly printing into an uptrend. And silver is significantly undervalued compared to gold on a percentage basis, not on a price basis. So I think we could probably have quite a nice run up until I'd say at least $35 an ounce on silver, maybe even up to 40 by the end of the year, but we will see. I'm no silver expert, but I think that's a very high probability of what we could get. Euro pound remains tricky because I'm not necessarily bullish on the pound. As we spoke about earlier, we are expecting the Bank of England to continue cutting rates later in the year. We are expecting to have, higher inflation, but that the data doesn't reflect that just yet. So for now, I'm going to follow the data as we looked at earlier and just say the Bank of England is likely to cut rates. The euro is also not necessarily in a strong position. So again, we've seen the euro get significantly strengthened, but that's only due really to dollar outflows. It's not necessarily a macro view on the euro. I'm actually quite bearish on the euro at the moment. So it's a case really of are we going to see stabilization in the markets where we can then say, okay, dollar bulls are back, euro bears are going to be back, so people selling off the euro to rebuy the dollar. If that happens, euro pound shorts are a great play to continue that mean reversion play that I quite often discuss where we have these spikes and then continue lower. But just for now, until we've got more clarity on what the markets are doing in terms of sentiment and risk, I don't know if I really want to be a seller of euro pound. I think I'd actually more want to be a buyer. So obviously leading on from that weak pound, we've got dollar outflows. We could potentially catch a small ride on euro pound to the long side. I'm not going to be looking to take, into new recent highs or anything like that. I'd be quite happy to just take a very, very simple sort of 1 to 1, 1 to 2, and get out. I don't really see any value in trying to be in the markets at the moment for a prolonged period of time, because things change so quickly. You know, we could be in a great position. For example, let's say we took a long here, we were sat saying, "Oh, this is perfect, this is great." Then we get more news revolving around tariffs, and we just see the markets completely sell off. Obviously, we've still got a 90-day pause, so it's not that realistic right now, but it's just not something I want to be exposed to. I'm quite happy just taking it slow at the moment. Actually, New Zealand CAD's not on the watch list. Sorry, that shouldn't be there. We got gold next. I think gold is slightly tricky right now. So I am in this long position. I did put this in the Discord. It wasn't a signal because obviously we already had a gold trade that hit stop loss. So I didn't want to take another entry on gold just for it to get stopped out again. This is more just testing the waters. If we can maintain this level next week, I'll be looking to send this as a signal to slightly better price. This was a bit of a aggressive trade on my part. So the reason gold's tricky is because the market sentiment has changed. We've spoken about that already. I'm not going to go into that again. And sorry, but the main problems are still there. It's more just paused. Obviously, the 90-day pause on tariffs. We're not out of the situation yet. So if we get back into trade talks and we don't get peace deal or trade sort of deals on the table, that's going to be a huge problem, and that will likely bring gold higher. But if this 90-day pause comes to an end and it's actually all fine, we've all made deals, there's not really any big problem, you know, it's all been a bit of a farce, then gold will again likely come lower quite easily and quite a lot as we have a large profit taking move. However, at the moment, all the indicators I've got are still telling me to buy gold. So if we also have a look at the edge finder here, we've still got gold as a buy. It's just not. Oh, actually, sorry, it might have gone. Has it gone? Uh, Let me just double check because that was there slightly earlier. Uh, where's my tools gone? EF scanner, gold and silver. Oh, interesting. So gold's a four. So actually, that's changed a little bit. So I would still look to buy gold, but probably not as much. So yeah, I would wait to just see what happens. If we do start getting more downside, likely just stay away. You don't want to be on the wrong side of gold, especially right now. It can be very, very unforgiving. Um, but again, if we can maintain this trend, we can stay above this level and we can even start printing a higher high and higher low, maybe even look to get in on a higher low that if that gets formed. But yeah, just remain very vigilant because the market's a bit tricky right now. Uh, Phantom, I see your message. I'll just cover oil quickly and I'll get back to you shortly. So oil, we do have a short reading for oil on the Elite Traders free research. So short oil here, slowing global demand, China, Europe, SPR releases, buffering supply, bearish near term. Obviously, that's a little bit vague, but the point is there. I'm not a huge oil trader, so I probably won't be sending this trade. But if you do trade oil, at least it's on your radar. I think from a technical perspective, oil is a great play. Obviously, we draw fib from high to low. We've got a very simple fib golden zone here between the zero point 0.5 and the 618 that also leads into previous structure here that's been previously used as resistance. We're still in a downtrend with these moving averages. So oil on a technical part looks great to short, but again, if you want to go out of your way and do some more research on oil, feel free to. It's not in my arsenal of assets really. The last one is the NASDAQ. So I think the NASDAQ is also in a bit of a tricky position, and I've been saying it might even sound a bit like I'm stupid to some of you, but to be honest, I don't really care that much. The problem is that things can completely change at the drop of a hat. And I've said that before, so I'm sorry to sound like a broken record, but I'm just really hesitant to get into any positions. So the only thing I'd really be paying attention to on the NAS and the S&P, is sort of the same thesis for both, is more just the trend. So we've already got the market sentiment that looks okay. We've got solid earnings so far. There's nothing that's raised any red flags for me, but it's just this trend that looks a little bit ugly. We are breaking structure now. So obviously we've got support level here, resistance level now, and we are breaking above. So if we can get this break and retest, continue higher, that would be great. And I would look to take price back into these all-time highs. The problem is I just don't want to be too aggressive. I've already said why. Again, don't want to sound like a broken record. So yeah, just be very cautious is the word. I think we're getting back to markets that are tradable. So last week I was saying it was pretty difficult. I didn't really have anything to talk about last week. Whereas this week Similar situation, but there is a little bit more clarity. We've got a little bit more direction in the markets right now. So I'd be quite happy to start looking to actually take trades, but it's more now just decreasing risk. Make sure you're not in any super aggressive positions or you're not in any stupid positions, and it's fine. Whereas previously it was more just I had no idea what to do, to be quite honest with you. The markets were just a bit of a mess. So that's that, and that's the watch list done. I'm still in my Swiss yen shorts. Obviously, we've been speaking about this for many months now. I've been moving positions around. I've been in and out of this market quite a lot actually. But I've got the first real long-term position in at 173.178. I'm looking to hold this one now. I'll be looking to scale in at previous levels of resistance. Nothing too crazy. I will of course keep you updated on that one as I manage it. Euro dollar long, this was a signal I sent, was it Thursday or Friday? I'm not 100% sure on the day actually. Um, but yeah, so far, nothing too eventful. We did have a really nice rejection here of this 61.8 level back into this range. So I thought we might continue higher. But again, I'm not necessarily super bullish on the euro at the moment. It's more just being bolstered by the US dollar outflows. And if we are going to see a temporary bottom get printed on the dollar here, this is likely going to be a very quick stop loss. However, obviously, if this trade does work out, that's fine. And I can see euro dollar heading back up to around 1.2, but that's only if we get continued US dollar weakness, which looks unlikely right now. Obviously, I'm talking in terms of how long we've got left in this trade. So again, we'll see, but it is what it is. Copper, we do have this one open. This wasn't my trade. I don't know anything about copper. I'll be completely honest, so I'll leave that to the trader that sent it to keep you updated on that one because it's way out of my expertise. But that's it for this week. So if you've got any questions, let me know. I'll just have a look at what Phantom said. Still plenty of uncertainty, especially regarding the the China-US tariff war. Trump claimed the other day that Xi Jinping called for a deal, but Xi Jinping denied the statement. That's exactly it, Phantom. I'm hearing all sorts of different things. Like Trump needs to show respect to China and do certain things and meet certain different things in order to get to peace talks. But who knows? Um, chill, chill on copper. We'll update later. All good. Um, so yes, that covers that. I'm completely out of things to cover for this week. So just to quickly recap. Oh, sorry, before I end the stream, or before I end the webinar, let me just show you the rates in the bank's trades. So the Swiss National Bank is still expected to go into negative rates, but please remember, I've never really specified this previously, but I feel like I should do just for clarity. All of this data that you see on rates is built by models. This isn't a set thing. This isn't from the central bank. This isn't from anywhere. So what you'll often find is like CME, PMT or any other source that will give you probabilities on rate cuts is all built from models. So, for example, I would tell you inflation's this, labor market's that, here's the current policy, and you would take your best guess at trying to figure out what the rates are going to be. So don't take this with 100% certainty. It doesn't mean that on the 11th of the 12th, 2025, the S&P is going to have a rate of negative 1.7. So just keep that in mind. So we do have the Federal Reserve currently expected to hold rates. We've got the ECB expected to cut. Bank of England's also expected to cut. Obviously, we've already spoken about inflation in the UK. Bank of Canada is pretty much 50-50. I don't really have any input on that. Bank of Japan's expected to hold. That's not a surprise. We've mentioned it multiple times. The Bank of Japan is known for being slow. And to be honest, hiking rates isn't their number one concern right now. I think it seems like the whole world is more just looking towards tariffs rather than rates. RBA is cutting. We've got RBNZ is cutting, and the S&B is also expected to cut. So that concludes there. What about pound yen? I see a nice pullback. Well, this is what I was saying. I don't really have much. Oops, that's not what I meant to do. How do I get off there? Uh, Let me just reopen the chart. I'm not sure what happened there. Okay, here we go. Okay, so pound yen, where is that? Yeah, so the problem I've got with pound yen, I think long term or medium term, we could probably get a really strong short. Again, we are expecting the Bank of England to cut rates. We've got cooling off inflation in the UK as well. And I am long term bullish on the yen. The issue is right now, if we are going to see the market sentiment shift, we're going to see a repricing on the yen and the Swiss, and obviously across the risk asset board, or sorry, across the assets board. So I'm not sure I would really want to go and go long on the yen right here and go short on the pound just yet. I would, to be honest with you, wait just to see how the markets are going to react. Because again, this might sound like me just going back and forth trying to save my own skin from calling out any ideas, but it's just the way I see it. Because again, if we are going to see the markets continue, oops, sorry, if we're going to see the markets continue risk off here, then we might just get to bounce and see the yen come higher and then pound yen short, sort of like an obvious trade in hindsight. But if we actually get the markets continue to shift to more risk on, we're likely to see the yen start to break down a little bit and give back some of these gains. So it's just a case of really monitoring. And to be honest, I would expect the yen to continue to give back some of that, some of the gains. And I would expect the risk assets to sort of just, oh sorry, the risk off assets to just slow down a little bit, because we've not really had many developments since last week anyway. So I don't see a reason the market is suddenly just going to shift back to a full risk off move without continued data. So guys, that concludes this webinar for the week. Please feel free to ask questions in the Elite chat if you've got any. This webinar is recorded as always, so you can always go back and rewatch it if you missed anything. Guys, thank you for tuning in as always. I hope you enjoyed your weekends and have a great week ahead. Guys, much appreciated. I'll speak to you all very, very soon.